Welcome back. We've talked a bit about Aritzia. We're going to talk about it again. It's a very high-profile stock. The stock has almost doubled since early April. Aritzia revealed today that its U.S. customer base, or late yesterday, its U.S. customer base increased by 40% from a year ago, and net revenue from the U.S. spiked 45% to $413 million. There were big gains in other key financial metrics as well. Let's break down the latest results with Jessica Ramírez, co-founder and managing director at the Consumer Collective. Jessica, thanks a lot for joining us. You've had a period of time to look at these numbers. What do you think of the most recent Aritzia results?
Hi, and thank you for having me. So we looked at them. We weren't very surprised. I think Aritzia is a company that is while it's quite mature, it is still very early in its growing stages. Obviously, it's been coming into the U.S. market. There's a lot that they've been investing in terms of operations and in terms of digital strategy and new store growth. So again, I'm not surprised where they're having these strong figures as they're hitting new markets in the U.S.
How far along do you think the U.S. expansion is?
I'd say early stages, to be quite honest. I think because we are just getting stores and they've come into top tier cities, but I think there's a lot of the US market that they're still hungry for. And obviously state by state differs in terms of market. So I think there's a lot within that. And then also just the investment that they've done with digital. And the digital channel is very important as you're acquiring customers and engaging with them. When you do open a store, it does boost up your e-commerce as well. So again, early stages for that. And in terms of investments with digital, they've only just started that. They've talked about the new app rolling out later this year. That's very important, I think, in today's market. They've been investing more into their social media channels and also campaigns in general, which again, very early stages of growth, because that tends to really boost a company. Again, so if I compare it to a company that's quite mature and opening internationally and opening stores, a lot of that digital strategy has already been invested into and is evolving. So again, it's very early stages for Aritzia to be at this point.
My question is on the international side. I know they're launching their international e-commerce site, I think, in this current quarter. And maybe you could help us understand how that site paired with this growing digital strategy could further drive sales, particularly without a physical store presence in a lot of these or all these markets.
Yeah, so as you go into new markets through e-commerce, it'll be learnings that they'll have. So if you're tapping into, say, Europe, you're going into the UK, you're going into France, you'll be understanding a little bit more before you physically go in there. So there's going to be data learnings on that side and what the customer responds to and how you can better position yourself once you are physically there. So that is always great. I think, again, as we're seeing more digital in terms of social media that they're investing in, you will start tapping into other markets just because of the virality that social media has. So again, that is a move in the right direction. And in terms of the way business today is, globally does help. Yesterday, I mean, if we look to Levi, they're an American brand. The majority of their e-commerce or the majority of their international business is much stronger today. And obviously they do sit in a very strong category that is denim, at least today. And again, I think for an apparel company, there has to be, apparel is quite difficult to navigate, but if you do have a good brand, if you have a good product assortment, you need to find avenues of growth.
The company does have tariff exposure. It does have China exposure. How do you quantify that? How would you describe that exposure and how the company's managing it?
So they've talked about coming out of China. So they do have quite a lot of exposure to their product being developed in China. They've talked about outsourcing and diversifying that, which, again, very early stages, and a lot of companies have already diversified. I think what seemed to play with them in a positive way yesterday was the fact that there's been negotiations that have been coming down in terms of percentages, especially from China. So I think that has played to them, where we saw guidance be a little bit more upbeat. But I do feel a lot of these concerns were still why the market reacted a bit muted to their earnings, despite the wins that they do have.
Okay, last question. Jamie, my co-host today, has mentioned that there's risk in fashion retailers generally when they occasionally get it wrong on fashion. They misjudge what will sell. You have said in some commentary that you really like Aritzia's ability to respond to fashion trends. How does it do that?
Yeah, so they work a little bit closer to time. And from what we know is if, for example, if there's a dress that they are testing and it's more of a trend item, they won't produce a full batch. They will take it out to market and see how that reacts, then bring back the data, understand, and bring out more. So it's a more closer to buy rather than buying deeply into a category, or buying deeply into a certain silhouette, which again, you react a bit quicker with that. They're also very well formed in terms of what their best sellers are. How do they reiterate that for the next season? So again, it's tightly held in terms of that operation, a bit more in terms of vertical. So again, you can have a better reaction to that. Apparel is very difficult, and it is a category that, again, if you do miss or you don't have something, it can cost you in a quarter. But I do think in terms of that they have had down that it has been a part of success of Aritzia. Everything else that they're currently investing into, again, that would be actual growth for the company.